Living Standards IGCSE Economics 0455 Crazy Cambridge. Welcome back to Crazy Cambridge. So what is Crazy Cambridge about? Here I provide IGCSE and AS explanatory videos. So for IGCSE I provide biology, physics, business, economics, accounting, math and English videos. As for AS, I provide business, economics and accounting, plus I also upload tips. This video was on request from Anusha, who wanted a video based on living standards and population. If you have any suggestions or queries, or if you want any topic video uploaded, do email me on crazycambridge@gmail.com, and also you could comment down below. So what is living standards? Living standards refer to all the factors that contribute to a person's well-being and happiness. So now there are certain measuring living standards, okay? Now in IGCSE we learn about two of them. The first one here is GDP per head or capita. Firstly, what is GDP? GDP is gross domestic product, which means it is the total value of output in a country over a given period of time. Now GDP per head or capita measures the average income per person in an economy. So how do you calculate this real GDP per capita? What you have to do is you have to do real GDP divided by population. So if you have any question in your paper 2 for IGCSE Economics in your section A, maybe for the big case study, maybe they'll ask you to calculate the real GDP per capita. So you have to do real GDP divided by population. Now let's look at the benefits of measuring living standards through GDP per capita. Firstly, it is a useful measure of the total production because GDP takes account of the total production in a country, and that's why it indicates that the material well-being of the economy. It takes population into consideration because when you're finding the capita, you have to divide it by population. So this adds emphasis on the goods and services available to individuals, and since it is calculated on output, it is a good indicator of the jobs being created. GDP data is readily available, so is population data. So it's easy to get your hands on the population data and the GDP data. Now, the drawbacks include it takes no account of what people can buy using their incomes. So a country with a high GDP per head may be no better off than a country with a low GDP per head if there are fewer products to choose from. Similarly, GDP does not consider the changes in technology which takes place in an economy, and this change in technology can have a big impact on living standards. So people might have had more income in the last decade, but they couldn't benefit from all the technology available today. Distribution of income is very unequal in reality, so the GDP per head is not accurate. Sometimes people might be very rich while others are very poor, but the GDP per head will only give the average incomes. Then real GDP excludes the unpaid work people do for charities and voluntary organizations. So whatever work is done for charities and the voluntary organizations, those are not taken account when you're calculating the real GDP. That's why it understates the total output. The value of output will be understated. Now there are certain index. The second type of measure for living standard is Human Development Index. This is used by the United Nations, and they compare the living standards across the globe through Human Development Index. The HDI combines different measures into one to give a HDI value from 0, which is the lowest, to 1, which is the highest. Now these measures include three, which include Income Index, Education Index, and Healthcare Index. Under Income Index, it is measured using the average national income, which is the gross national income per head, adjusted for differences in the exchange rate and prices in different countries, which includes the purchasing power parity, which means how easy is it for people to purchase goods, how much is the purchasing power parity in the country. Then Education Index is measured by how many years on average a person aged 25 will have spent on education, which means the years of their schooling. And how many years a young child entering school can now be expected to spend in education in his or her entire life, which is the expected years of schooling. Healthcare index is measured by average life expectancy at birth. Now let's look at what are the benefits of using HDI. It takes into account some of the major indicators of living standards which I mentioned previously, which is education, then income and healthcare. It recognizes that it is not just output or income that determines living standards, but also social factors. It is a useful method to compare the global living standards and it shows a clear pattern of the living standards. It's also very useful and reliable measure since it's produced by the United Nations and this increases the guarantee of using the HDI and it is also widely used and recognized. What are the limitations? So it combines a set of separate indicators into one, and so a country with good literacy rates and living standards, but a poor life expectancy, which means poor healthcare, may show a low HDI value even though their education is good. Then there are wide divergences in HDI within country. GNI, the gross national income per head, does not say anything about inequalities in income and wealth within countries. It does not consider other factors such as environmental quality, the access to safe drinking water, political freedom, crime rates, and lots more. And these factors are also very important indicators when it comes to comparing the living standards of countries. Now, the Human Development Index information for all countries may not be available for, like, for example, the countries which were war struck, where civilization has been disrupted. Now, let's look at the reasons for differences in the living standards. Firstly, there are regional variances in income and consumption. The major types of sectors or jobs, which include manufacturing and services, heavy regions will have high incomes, education, and health services compared to agricultural regions. The local government provisions of education and health. Then, if you compare the productivity of different industries, the more productive industries are, the more they yield output and incomes. Then the major industries, it might be the strategic industries, which are really important for the country, like weapons or something like that. That sees what make countries like Qatar and Norway achieve some of the world's highest per capita incomes is that their income comes mostly from petroleum industries that are scarce and highly demanded internationally. Then population. So dense population, lower per capita income and put pressure on scarce resource. Then the ability of citizens to pay their taxes. So higher tax base and taxable incomes allow governments to invest in infrastructure and welfare programs as their tax revenue will increase and they will increase the provision of goods and services provided. And the provision of health and educational facilities, the variety of goods or services produced within the country. So, if citizens are given a choice to choose between a wide variety of products, the living standards automatically rise. Western countries like US enjoy this. War, crime, and natural disasters. War struck countries of Asia, the high crime rates of Latin America, and frequent natural disasters in island countries drive down their living standards as they damage the infrastructure and put people into hardship. So this means these natural calamities which occur, they are another reason for differences in the living standards in different countries. So this is the end of the video. I hope you found this video useful and good luck for your exams. Thank you for watching Crazy Cambridge and please do like, subscribe and share.